but someone
dent into the system for
but
sure.
someone needs. The reason why big statements are important is because someone needs to ask that question. And in my personal life, my friends know that I'm always encouraging them to play out their thoughts to an extreme. And the reason why is because when you play out your thoughts, like you want more money. Okay, what if you had all the money? What would you do? And then you say, I don't know, I never thought of it. So you need to play these things out to an extreme, and asking a big question, I think, is a way for centuries people have used writing to ask these big questions to make you think about that extreme. Yeah. And I think it's really hard to advocate now. I mean, look at the US economy. 20% is housing, okay? 20% is medical services. I would say probably 40% is some form of government. And then maybe, 10% like insurance. You get down to where you have only, you grew up thinking in the US, I'll have a business. Your parents say, make a lemonade stand, learn about business. That's such a tiny, tiny portion of the economy now. It's almost non-existent. I mean, I'm trying to encourage my kids either to be artists or something fun, or a politician, because I mean, it's like the whole economy now. I mean, if you visit central states, I'm sure you've been to some places that were formerly communist states, they have rings around the city. And whatever ring you live in signifies your connection to the central power. So if you had an apartment in the smallest ring in Moscow, you were very close to the power. And if you were way out in the last ring, then you're a factory worker. So it's interesting to see this now, is that it's very hard to advise young people to go into this like spirited entrepreneurial activity, because when you really look at the facts, it actually does not make a whole lot of sense. I mean, I've never been on TikTok, but all the time now, because I don't have my phone, so I'm watching where I'm going, I'm having to move because people are filming themselves. Yeah. And I'll ask them, I say, I'm just curious. I know I'm an old guy and I don't know what's going on. What are you doing? And they'll explain to me that they're dancing on a video to post on the web. And I ask them, are you getting paid? No. And I think, what is the point? Why don't you go to a dance club? Then you would meet people. But they don't do that. That's what we did, is we go to a club where everyone's dancing or something. You want to dance, you go to a dance club. It doesn't happen anymore. Like now, my friend was saying, as kids, when we were kids, you'd know where everyone is because all the bicycles are in the person's yard. Yes. Okay, remember this? But now you have no idea where people are. They're just online. Essentially, the Fed wants to take the balance sheet back to pre-pandemic levels. And based on the rate at which they're shrinking the balance sheet, in order to get there, it would be somewhere between 14 and 18. You know, we kind of break down the mechanics and we don't really know if they'll keep the pace or up or down. But I explained that they actually have just gotten started. And the whole nature of the article is my friend who is involved in the mortgage business is having a really lean year. And he's very frustrated. And so he was telling me this, and I was just asking him kind of, how are you feeling? What's going on? And as he tells me things, I'm relaying them in the letter, and I'm trying to say to him that, you have to be ready for more. He thinks it's going to turn around. He's like, well, the Fed's surely going to fix the interest rate back to where people take mortgages. And someday, but probably not immediately. So you have to be ready. I mean, Jerome Powell said at the Economic Club in Washington, with David Rubenstein, who was his former boss, which is amazing, that he's going to take the balance sheet back to this level. And I try to encourage people to understand the Fed usually tells you what they're going to do, but you don't listen. Like Bernanke told us that he was going to do QE because it was going to make housing prices steadily rise, and it was going to make your 401k steadily rise, and everybody would be happy. And all the gold people said, no way, but it actually worked. And so he told us what he was going to do, and he did it. They went too far because, okay, you look down and there's books about the lending to control. Yeah. This became a thing like in maybe the 50s and 60s, was like, let's use lending around the world as a way to control other societies. And you can go back and see how this became a thing. And you can't do that if your currency has readily available alternatives that are better, right? So I think they reached a point where, like think about the whole Russia sanctions thing. They can still sell oil, and they can sell it to the Indians, who then do some refining and sell it. It's crazy. I mean, it shows you that we'll know when we're older. There'll be books written about what was happening really at the State Department last year, and we'll probably see that there was a lot of very heavy pressure on the system that we knew for 35 years or so. I think it's evolving, and people need to see that as that changes, there will be investment implications. I mean, based on the fact that it's centrally planned, it's very difficult to know. But
you're not in those meetings.
Yeah, I don't think they want me in those meetings. But the thing is that when I look at a chart of the 10-year, like I was telling in the newsletter, I was telling my friend that the 10-year really could go to 7, and people say, what, 7? It's like, look, I'm telling you that if you look at this chart, it really could. I mean, it went down for 35 years or something. I mean, it could definitely shoot up now, because remember, it went up and it's kind of calmed down, and now it's deciding what it wants to do. And the thing that's so crazy is that the US has so much debt that as they're rolling these over, I mean, I have a treasury account to bid in the treasury auction. The 6-month bill is 5%. 5%. I mean, it's really crazy. I mean, it's a lot of money, right? $1 million, that's 50 grand a year in treasury bills. I mean, it's a high interest rate from what we've been used to. And so as this debt begins to roll over, what's going to happen is the cost to service this debt is going to rise much more than they expected in the budget talks. And we're going to go to Minnesota and talk to this congressman, of course. We'll ask him about this. But I think this is going to create, extreme pressure. And the Fed, I want you to picture the Fed in a really difficult spot. Do we keep protecting the dollar so that we have the ability to go around the world and control everyone, or do we switch and protect the home system? Okay, in which case we're going to unleash rapid and dangerous inflation. It's not going to be like the 70s. It's going to be very different. And I think they're faced with this dilemma, and that's why they've gone so fast, is because if you go fast, as debt is rolling over, you have more time if you go fast. If you went slowly, then as debt rolls over, if you went 2 years, most of the Fed's debt rolls over, like the Treasury debt. So because most of it is on the front end. So, and companies, remember, there's companies that borrowed and they borrowed for 0% or 2% or whatever. They're not making any money. They don't have to turn that over until next year. So they're still thinking, the Fed will come back down. I think it's already happening. I show in this week's letter how it's happening right now, and explain what I'm seeing in the market, the attitude I'm seeing. I see people complacent. They're waiting. They still have the energy to gamble and to risk on things and to buy risky stocks, and all these. They're not afraid. And when people are not afraid, and the chart is doing this, it tells me that the chart is going to do this, and I think that's going to be quick. I'm not sure you need to trade that. I mean, I don't recommend in the letter going short. It's not that kind of thing. I think once you see it and you start looking around the people and your daily life, I think you see like this could definitely get ugly.
Yeah.
Quickly.